how do we use position size calculator? So let's say you're on a Euro USD chart. Okay. On a Euro USD chart, a pip is the fourth decimal point, like the fourth digit after a decimal point. So 1800, when this becomes 1801, that means one pip. If that is clear. So that is 1802, that's 2 pip after 800, 8000, whatever you call it. So let's say I'm dropping a position like this. Okay, I'll just drop a short position right here. Let's say we enter around this place and we put a stop loss around here, giving some margin from the wicks. Now you can see it clearly here, 73 pips. If you open it, it is 730 ticks, not pips, but that means 73 pips. Now what do we do? We can just go over here, my FX book, you can just write on Google position size calculator. Right. For me, the first link is from my FX book. We open that and then the currency pair is Euro USD selected. You don't have to modify this. This lots is fixed and you don't need to modify that. This account size doesn't matter so much unless you know how much you want to risk. For example, here we have a risk ratio with percentage. Risk ratio with percentage, if I say this one, then that means $10, something like that. And if this is 10,000 balance and 1%, then it's $100. But what I do is I directly put in the money. I'm saying it like I want $1,000 risk, right? With a stop loss of 73 pips. So 73 here and then calculate. That's it. You get your lots 1.37, the sizing lots. That is how you calculate how much lots you need to put in your MT5. And so long I have only be using MT5. I don't know if you guys know what MT5 is. Maybe not everyone knows that, but MT5 is the tool through which most of the traders trade because it's easy and the learning curve is nothing. You can just go on YouTube. Very small video will explain you every single thing that is required for you to know. So I hope that is clear. This is how you do it for pairs which are like Euro USD. But JPY pairs work differently. It's not the fourth digit after decimal point. For example, right here on Euro JPY, right? So I have my position which I had sent you guys today. So right here we have Euro JPY and you can clearly see this is 95 pip and the calculation is completely different. The pip here is the second digit after the decimal point. Second digit on any JPY pairs. It's the second digit. So let's say it's 71. So that's 71 pips. Okay. Now the distance between these two in the stop loss is calculated based on these two digits. And after this, if let's say there's a huge difference, there is 183, something like that, right? So I can go above 100 pips and 100 pips comes from before the decimal point. So you don't need to learn this or by heart this anything at all. As soon as you drop your position right here, you will see pips here on your trading view. And that's what you enter right here. Here you have to select Euro JPY and 95 pips. And it's 1.64 lots if we are risking $1,000. So that's how you use position size calculator. You can put any currency here and get your position size. I hope that is clear. All right. Now I'm going to talk about prop firms. So prop firms is a way for you to not risk your money so much. For example, let's say you have $1,000 on which you want to start trading, but that also means you're risking your own $1,000 to make a lot of money. And if you go by the 1% rule, which is very common that you should not take more than 1% risk, then what are you going to risk on 1%? That's on $1,000, that's $10. But let's say I have a prop firm account like this from the Fivers and now on Fivers, there are these hyper growth, two steps, three steps. Which one is good for you? So normally I have seen two steps is the best way to pass your account. One step, it's a little expensive, you might say, but you can see the leverage is different. You can see the stop out level is 6%, daily pause is 3%. Now, when these rules apply, right? Stop out level 6% and 3%. It's like if you're getting funded for $10,000, if you're risking 1% on a $10,000 account, you can only go down till $600. If you lose $600, your account is breached. Like you can't trade anymore. Then you'll have to buy another account. So 6% is the stop out level. And on the daily pause, now daily pause works in a different way. Let's say I am in a position on gold and I have made around $500 on the $10,000 account. $500. So that means that is 5%, right? Now, this is not a book profit. This is a floating profit. The position is still open. I haven't booked my profit. Now, what happens is on the midnight when the session switches, they are saving my balance as let's say $10,500, right? Now, next day, something happens like the market crash. Now, what will happen? That 5% comes down, right? Now, if that 5% comes down, that means the daily pause hits. You can't trade for that day. On two steps, it's different. It's maximum daily loss. That means it's not just you can't trade for the day, it's that the account is gone. But that's 5% again. And the maximum loss is 10%. I hope that is clear. The maximum loss is 10%, profit target 8%, on the second step 5%. So what happens is maybe you will just get your account cleared, you'll pass two steps, everything is good. But once you start trading for a lifetime account, it's going to be very small if you're having 6% or 3% rules. This is the best thing we have so far, 10% and 5%. And this is enough for us because that also means you need to manage your risk clearly. Now, three-step bootcamp account is different. Again, they have 6% profit target. It's smaller. Max loss is 5%. Now, here we had 10% and here it is 10%. And here we have 5%. Now that also means you breach the account easily. And they have a scaling program. Once you clear this two steps account, what happens is, let's say, whenever you make 10% profit after you are funded, your account will scale. And they have different scaling criterias. For example, from 5K, you will go to 7.5K, then 10K, then 12.5K, and all of that. Now, if you're risking $1,000 from your broker account, and let's say I want to buy this account, two steps, let's say 5K or maybe 10K. Let's do 10K. You can see I am getting this in $78. Instead of risking $1,000, you can have a 10K account at $78. You can have easily 12, 13 accounts from this. Even if you're failing, you'll have a lot bigger chance of passing the account. If you're failing from this, then that means you would have failed that $1,000 long back. So you get more opportunities when you're trading with prop firms. Now there are a lot of prop firms. There is FTMO. FTMO is good. Fivers is good, and there are more. But the problem is right now I'm using Ovenda server for looking at the chart. So the prices on Fivers is very similar. FTMO is a little different, but Fivers is perfect with Ovenda servers. And also each prop firm comes with a different broker. So at the end, there's a different broker from which they are getting the information about where the price is, what's the spread, and what is happening. So I can see very clearly, of course, not compared to my Fusion Markets broker account. This has good spreads. Now that means my stop loss, let's say the way price came right here, almost to this place. Now, if you have a sad prop firm or a sad broker, what will happen is even though price didn't hit your stop loss, it will hit because of your spreads. You will be, cleared out from your position by the broker and you won't have that trade, even though it didn't hit your stop loss. And that is very common. So going to cheap brokers who are giving a lot of breaks over rules and regulations on this, but if you see the trust pilot, main thing is check for trust pilot how much was the review for the prop firm. So you can simply go on, let's say I can type in the Fivers trust pilot. Now here you can see the reviews, the rating is 4.8, which is a very good thing. It's people like us, the traders, who are reporting these updates. They are giving reviews based on their services. So it's a good one, right? I didn't know it had 4.8. 2 years back when I had first checked this, it was around 4.0, something like that, but it has improved over the period. So that also means that payouts don't get stuck, and a lot of criterias which prop firm has, for example IP rules and all, they have better rules. Of course IP rule is there in Fivers as well, but they are smoother. You can communicate with the support, there's live chat support available, all of this stuff. So choose your own prop firm, I don't mind, but go with the prop firm account, never with the broker account, unless you call yourself profitable. Now one question is there, if you pass a prop firm account, is there any chance the firm might deny or delay withdrawals? Yes, there are chances that firm might delay withdrawals, or maybe, I told you I passed a prop firm account recently on Fivers, but I haven't got the account yet because it was January end and it was during the weekend. So they haven't approved it yet, but I might get it by tomorrow. I checked it with the support team today and I'll get it by tomorrow or something, like tomorrow end of day, they have said. Now about money. So what happens is they don't want you guys to use signals. For example, you're using signals. I don't like this rule at all, because if you're using signals, you are paying for it. And how should that matter to any prop firm, right? But still there's a rule if they catch you taking signals, because what happens with signals is in scalping, let's say most of the signal groups, they send a position to enter around at this price and stop loss at this price and take profit at this price. So there are so many people entering this position positions, and they are able to catch that easily. Exact positions, exact time they are putting these orders. There are so many constraints they are able to check. That's what they don't like. Initially, in my days, I had done signal trading. I never got any messages or mails from them regarding this, but I never truly used complete signals. I also used to do my own trading. Second, there are IP rules. Let's say you're in Mumbai, you're trading from Mumbai, now you're in Dubai, you're trading from Dubai, now you're in Lucknow, you're trading from there, now you're in Europe somewhere, and you're trading from there. Now, even though you are trading from that account, they have IP restrictions because they don't want people to cheat. They think maybe you gave your credentials to someone else out there in the world and they are trading for you. So at this point, you can always explain to them that these are my tickets, I was traveling, everything can be done and this can be resolved. So that's there. They won't go and deny you your money, but what they'll do is instead they'll just send you a mail and then you can justify what was happening. So there might be delay, there might be problems hanging around here, but that's very rare as well. If you're just trading from your home, or maybe you just move to a different city and you're trading from there for a long time, it's completely fine. They have 14 days withdrawals. Every 14 day you can take out a withdrawal. But if you're on a new account, maybe let's say you didn't take a withdrawal, you made 10% on a funded account. Now what happens is that account will upgrade to a better deal. Let's say 7.5K account or 10K account or 20,000 account or $125,000 account. Now when this new account comes, calculation, the countdown resets for that 14 days. So you can't take out a withdrawal for another 14 days. You are funded. You need to make sure that you take out your money as soon as it is reaching around 10%, and it needs to fit the criteria. So this is how you do it. I'll send the affiliate link for Fivers. I'm not gonna send for FTMO because I myself don't use FTMO so much because of the prices, but it's a good prop firm. It's not some scammers. So Fivers and FTMO, they are the originals, and that's why I recommend them, nothing else. All right, that's clear. Fivers, make sure you don't use your own money. I never suggest people to actually use your own money because there are high chances that you will lose it. You're a beginner, you have a lot to learn, and it takes a lot of time to become profitable. It's not a 1 day thing, it's not a 1 month thing or 3 months, 6 months. It is going to take its own time. Some people are actually profitable in 3 months, and that's what I thought of myself as well, as I had passed my account in 2 weeks, phase one, phase two, both. But it took more than a year to become profitable. So I thought there are so many people can do it, but there are more people who have failed. So a lot of people fail. But what you have to do is you have to stick with it. You have to keep yourself motivated and work on your psychology more. That's why in every session there are going to be some psychological stuff I'm going to speak about. All right, Fivers is done. Now let's get back to market structures. We'll start with Euro USD. Now I hope all of you guys know what's a pip. 1799 was the pip. This is the pip, fourth digit. In Euro GPY, second digit is the first pip. Then this becomes the 10 pip. This is the 100 pip. This is the 1000 pip. So that's how it works. Now, let's start with weekly time frames. I'm going to talk about structures. Now, when you see a structure on your charts, there are two different types of structures actually you see. Now, what do I mean by two different type of structures? One is a clear technical one where you judge the higher high and higher low based on what kind of candles it's printing. One is something that is very clear to your eyes. For example, I would say a market structure started from right here and it went on like this to this and then this and then this, right? So this is kind of a market structure right here. But when it comes to trading for me, what I see is this is just for a rough view for me to understand trend, how the price action is moving. But when I want to decide whether the market is bullish or bearish on a particular time frame, I see it this way. The market is going here, it created an angle, it came down and then it moved up. Okay. Here we have lower high, here we have a lower low, and then this is the higher high, this is higher low, and then it slightly broke the price. I'll just zoom it so it's clearly visible for you guys. You can see the candle closed just above the previous ones. So this broke structure. This is the new higher high, and this is the previous higher low. And now this has created a new higher low, and then now this becomes higher high. Okay. So understand this. There won't be any higher low until there is a higher high. Now, what do I mean by this? Let's say price is doing something like this. It's going up, it came down right here. Okay. So of course, this point right here, based on candle body. Now this point right here, consider this as higher low and consider this as higher high. Now what is this point? This point is nothing. It means nothing at all unless there is a break towards downside or the price moved up. It's just market structure at this point. It's market structure. And when as soon as the price breaks towards upside, then we have a higher low. And this is not a higher high yet because the price can still go up. We don't know, right? Right now the candles are printing and we don't know what's happening. But as soon as price started creating structure towards downside, we have a higher high. But now we don't have a higher low. I hope that's clear. We don't have a higher low until there is a higher high, right? And higher high can be kept on increasing until it starts creating some candles towards consolidation or moving down, something like that. So we'll come back to it in detail in this class today itself. This is what I mean by higher high and higher lows. Now coming back to the prices in the normal way. Now this is weekly time frame, right? Now we'll start from right here and we'll work our way towards the downside because you can see there are different structures. So it's much better to explain to you in this way where it's very easy for you to understand how I'm doing it in consolidations. Clear price movements are very easy to detect, but consolidations are where it becomes difficult for everyone to understand whether a higher high is created or lower low is created, what's going on in the market. So please closely pay attention now. You can see the market started from here. So far, the market has been bullish. Yeah. So here we have a low high. Here we have a low low. Now this price broke structure. This is the higher high. I'm going to come back to what makes this lower high and everything. But just for now, this is the higher high. This is the higher low now. Now this is the higher low. And this becomes higher high. I hope that is clear. This is the higher high, new higher high. Now from here to here, anything happening. You can see the price is doing all these structures. It's printing really nice candles, right? But all these structures mean nothing because I'll drop some horizontal lines. This is your higher low, okay? And I'll just print one more. This is your higher high. Okay, I hope this is clear. This is the higher low, this is your higher high. Now, any candle happening like this in between whatever candles they are printing, they mean nothing until the price broke structure right here. You can see there's a change of structure. This was the higher low. A body closed below this line. That means now this is the lower low. Now, this is the lower low because the structure was broken. And what's the lower high right now? This is the lower high right now. It's not this. If a candle prints above this, that means it changed structure again. Now, how do I actually choose this? What is higher low? What is higher high? So, what you need to understand is when the market is moving, it's creating angles, right? You must have heard this term a lot. It's creating angles. When it's going up, it broke structure, it created an angle towards downside. If I see it in, yeah, let's say this way, these are not candles, but can you see this now? This is an angle, and now the price is moving. Can you see an angle right here? No, it's just moving up. But this is definitely an angle created. So this is where you mark your point. This is where your higher low will be. And whichever angle is the closest one. For example, I told you this one. You can see there's an angle right here. There's an angle right here. There's an angle right here. So the recent angle would be marked as lower high and the lowest structure will be marked as lower low. I hope you're able to catch this. These angles are important. Now, I don't use line chart to actually understand this because it creates a lot of false angles as well. You can't just rely on this line chart to understand this. There's a much better way to do it. Now, I'll find some price action which can satisfy the constraint. All right. So let's say the price started moving from down here. You can see this is of course a lower high, this is a lower low. Now the price is creating this structure, it's going up, right? It's going up. This is just one candle, this is not much of an angle. You can clearly see I can easily draw a line from this. If I selected a line, I can easily draw a line from this and I don't see an angle at all. I don't see an angle. So this comes with practice. What is an angle? What is not? So let's say price is moving up and there's a red candle right here. So is this a pause to the structure? No, because a pause to the structure would have been something like when a candle comes down to below the previous candle. This is a very small candle, right? If there's something like this, or maybe there are three candles going horizontal. One is coming down, one is going up, one is going down, and then again maybe it's going up, or maybe that candle gave a really big wick, something like that. More than two candles in short, printing on the same level, that creates an angle. But here, right here, there's no angle. The price is going up. This is not an angle. The price is going up because you can see, even though the wick was created so big, the price closed inside the candle. So you don't have a structure right here. There's no angle creation. You can see the price just moved here. But if I see this on line chart, there's an angle. That's why I said you can't rely on line chart. That's why I need to see the candles, what candles are printing. Is it inside the body? Is it creating an angle? Now, this is the higher low. This is the higher high because definitely it broke structure. Now, this again is the higher low. This is the higher high. This is not a structure. It printed inside. Again, same thing. Now, look, I was talking about more than two candles. The price came here. You can see there's a red candle, there's a green candle, and there's a clear angle, right? If I try to draw this, I can't just go and put a straight line from here because the price didn't move from the line. If I do it from right here, if I do this, yes, you can see the candles are touching. If I try to move it upside and then it's touching here as well, it's touching here. It's clear. But if I try to do from here, the price is not straight. There's nothing. There's empty stuff right here. If I try to reach the high of this candle, so there's empty stuff. So that means I have to pause here. I have to pause here, then create this, and then do this. So that also means now all this time price was creating bullish structures, right? Now this structure is nothing now. This is not the higher low because there's an angle right here. This is the new higher low. This is the higher high. When price breaks this level towards downside, it became bearish. And you can see the further momentum towards downside. Actually, even if you count this as structure or this as structure, the price closed below all of that. This was a clear indication. As soon as price broke from here, you saw a bearish momentum, even though it was not very huge. So I hope you're getting the point that as soon as it broke structure, it broke all of this. It broke all of this. And it's a very simplest way to understand this. It needs to create an angle. That's the most important thing. That's how you understand what's a higher high, what's a higher low. All right. I hope you guys are able to understand what I'm trying to say. So this is very important. Let's say I'm taking a trade based on support and resistance. I'm taking a trade based on support and resistance. Now, if you don't understand what time frames are with you and against you, how would you decide based on what confluences you are taking the trade? If you're not able to understand if the market is bullish on a 4 hour time frame or not, or a 1 hour time frame, if you read that wrong, that means your analysis can go wrong very easily. For example, Euro JPY right here, I know this 4 hour time frame is bearish. This 4 hour time frame is bearish even though I have entered this trade, but that is based on support and resistance, and that is what I've been doing. And as I have previously told you, that it should be very difficult for the market to hit your stop loss. If it's trying, it should be difficult for them. Now you can see the price as soon as I entered, it started going down, but it actually went down below the structure. On 2 hour, it didn't change structure. 2 hour it's on the EMA. 2 hour is still bullish, and that is what my confluences were on different time frames. And this is the support area. This is a support resistance based trade. And over the period, you can see this price has been moving in a trend. As soon as it touches down, it goes towards this side, and it never comes down to this level. Now, of course, we haven't taken trade right here. That means a stop loss can get hit. It's possible and it's okay because some trades you win, some trades you lose. If you try to avoid losing, you're going to keep on losing. So never try to avoid losing. Don't be scared of taking trades because you are going to lose trades. That's the thing. That's what win rate means, that you are going to lose trades. If you have 100% win rate, then it's a different story. You're never going to lose. But is that possible? No. Getting scared is where we start making mistakes. Now, right here, you can see why 4 hour is bearish. The price came from here to here. Now there's not a single candle closed below this. If one 4 hour candle would have closed below and then that structure would have moved up, from your, let's say this price went up, it went down again, and then it went up to break the structure. Now it becomes bullish. That's a different story. But right here, it's not the same. It's very different. So 4 hour is bearish. 1 hour, we have a different story. And this one changed the structure. There's an angle right here, a lot of consolidation. So this is the lower high, this is the lower low. This became bullish, kept on moving, and then it's doing bullish, bearish moves again and again. This became bearish yet, and 1 hour is not bullish still. But we have a good support right here, and the price has definitely, you can see it's showing a strong reaction from here. It's not easily breaking it down, even though it's not going up as well. But you have a good support. It is taking a lot of time. It's taking a lot of traders, a lot of liquidity to hit your stop loss, which is a good thing. It should take time to hit your stop loss. It shouldn't be easy for the market. Sometimes it happens, but that's a complete different story. But most of the times, it should take a lot of time to hit your stop loss. That's what swing trading means. It doesn't mean that in the next hour you lose your trade. Now, let's do some quizzes with you guys. Polls. I'm drawing a line right here. Tell me which one is lower low. Now, I'll choose a different line. This one. Which one is the higher low? Because the market is definitely bullish. So this is point one. All right. This is point two. Okay. Now you can see the price is easily going from here. But is this the higher low or is this the higher low? I'll ask this. All right. Answer. One more person left. And I'll end this poll now. So 60% of you said this point one is the higher low, and 40% said point two. So 40% guys are wrong, and 40% just means two people. So the thing is, as I said, this is the third candle where the price is redirecting from. If this would have been just one candle inside, it would have been a different story. But it created two red candles and then it moved up. So this is some consolidation happening here. So this is an angle. Here, right here, it's a different story. It's single red candle inside body and price moves up. Here it's going up. It's, you can see I can't come up from here. I'm easily able to come up from here. The candle is very close when going up. If I mark it here, there's more candle almost touching it. The direction changes just because of these two candles. So this is an angle. The higher low is there because this higher high is created. Of course, this is also a lower low. Yeah, this is also a lower low, but this when price starts moving up and it's creating a higher high, that means there's a higher low. Price creates higher high from higher lows. If there is a higher high, which one is the lowest point of it? Right? For this one, it was here. But there's no higher low until you have a higher high. Because the price might consolidate inside for as long as it wants. But until we see a break of structure or change of structure, we don't know whether there's a lower high getting created or a higher low getting created. That's how you find out. Now, again, right here, the price is going down. It broke high again. So this is definitely an angle. You can see the candle is bigger than this previous body. So this is an angle. This created higher high and this became bearish right here. The price turned bearish for a moment right here to continue up again to make it bullish again. But this you would say is a bearish thing, mainly because it broke the higher low. It changed the structure. Now we'll do more of this. I'll actually, in fact, explain to you guys how to draw this so that it's much easier. Now you see there is so much consolidation on this price action. So much consolidation. Let's say the price is going up here. This is the higher high, higher low, higher high, and this is Nothing. This is nothing at all. The price went up and then came down, right? Now, would you say this price is bearish or bullish? At this point, is price bearish or bullish? Everyone, I want everyone to answer this on the chat. Please, guys, always when I say everyone answer, just type in your answer, every one of you, so that I am able to understand whether you're learning or not. Now, you can clearly see this was a higher low. This is a higher high, right? Now, right here, this means nothing. This means nothing. But now it means something because this is the lower high and this is the lower low. The market is bearish right here. At this point, you can see the candle closed below the structure. Even though it's very small, you may not count it, but it's a structure. It has closed below. That means the market is bearish. It's not bullish. Now again, price went up. It again turned bullish because lower high was broken right here. Lower high broke. This became bullish. Now price came down, created this. These all this point. What is this? Tell me. Is this a higher high? Is this a higher low? What is it? Tell me. I'll put a circle right here. This point. So this is where market got bearish. This is the higher low. This is the higher high. Everyone type in. What is this point? All right. Yeah, this price is consolidating. It's just market structure or it's nothing. All the answers are right. It's nothing right here. It's just the market came down, it went up again, right? And then it came down. Now tell me, answer this. What is this and what is this? Let's first answer what is this? What is this point? Yeah, perfect. This is the lower high. This is the lower low. All right. So we have this right here, and then price goes up again and it creates a new lower low. This is the lower high. There's so much consolidation happening right here. There's so much consolidation happening that price is just going up and very quickly coming down, creating new lower highs, lower lows, and then going up and then creating lower low. Now this is a big structure, but at this point all of these structures were very close, and you need to understand that these small structures matter because they change the bullish and bearish points. When 4 hour structure becomes bearish, that means 1 hour, 30 minute, 2 hour, all these time frames also became bearish. So that is very important. On the other hand, 1 hour, 2 hour time frame will most of the times they'll first change their bullish bearish trend and the larger time frames follow that. The smallest time frame is the first time frames that change trends. It starts from all 1 minute to 15 minute. But the real identification where the structures has changed or not comes from higher time frame. When higher time frames align, let's say daily is bearish, 4 hour is bearish, weekly is bearish, then you will definitely look for a trade where you want to enter a bearish position because all of the time frames are aligning. Doesn't matter what the 15 minute or 5 minute says. Now this is, I guess this is very much clear to you guys now. What is a higher high? What is a higher low? So tell me, what are these points? What is this point? Right here, this point. This green candle close, what is this? All right. And what is this? This green candle close. Again, perfect. All right. So this is higher high, this is higher low, higher high, higher low. I hope I want you guys to practice this. I want you guys, if you have questions where you're not able to determine on your charts whether this is a higher high or higher low or not, you can put a screenshot in questions for Karan on Telegram, and I'll help you with that. Now again, here these structures mean nothing. These structures mean nothing at all unless we have a break of this. Now, as soon as this breaks, you can see there is some kind of green candles inside bodies happening, but I'll be able to draw this line very easily. But this and this, among this will become your lower high and this will become your lower low. I hope this is clear. This will become lower low. So market right now on the 4-hour time frame for Euro USD is bearish. And that we can clearly see. You can also see the EMA is broken, which is very difficult to break. EMA is broken now. The market is moving really nice towards downside. So if you would like to take a trade, let's say a day trader will come or a person who wants to close their trade in the during the day, between morning to evening, you can go on to lower time frame. I do not recommend this, but this is how you do it. This is, let's say, support lines, right? On a smaller time frame, I'm just showing you how these helps. Now you can clearly see there's a support line right here. There's a support line, there's a lot of touches right here on the lower time frame. And the 4-hour market structure changes right here on this line. Now when the EMA breaks, you can already see it already broke support and the price is expanded towards downside. It didn't consolidate at all, it didn't retest at all. Now on the 4-hour time frame, I can also see the EMA is there and the price broke that EMA right here. Now if I shift down to 1-hour time frame, I can easily take a trade like this. The price broke right here. 1-hour time frame, or maybe because you want to close your trade early, I'll rather see it on a smaller time frame. I can take a trade like this. Now, now I'm showing you you can take a trade like this, but I'll now tell you why you shouldn't take trades like this. What happens is 4-hour right now is bearish. Now there is an 8-hour EMA. You can see the rejections is already happening, right? There's some rejection right here. On the daily time frame, there's an EMA right here, right? There's a structure right here. Now, when you trade against the trend on the higher time frames, there is possibility you will lose a lot because this is where you can see the global structures with these are the big structures, and this is where price also reacts from a lot of times. Price comes down, let's say right here, you can see this is a big structure. Price came down, continued up, it rejected. This is a big structure. You can see price went up, came down, rejected, came up, came down around this level, just around this level. You can see from the wicks the price came up again and then went down. So all of these prices also create support and resistance. There's a lot of touches right here. If I try to put a line here, there's one touch right here, there's almost this two touch. If I create a zone, there is three touches, four touches, all of this touch. If I just create a box out of this, now you can see there's one, two, three, four, five, six. Six touches that is used to reverse the position. All of these touches have reversed the position. This one reversed, this one reversed, right? This one reversed, not completely changed the structure, but it definitely reversed. Right here, it created a large wick. Here, it changed the structure, and then this one broke. But what do? We play the odds. Majority of the time when the price came here, majority of the time when the price came here, this is a little out of today's scope, but I'm going to give you such kind of things where you are able to understand price action the real way. You see how many times price crossed smoothly against how many times price rejected. This one is almost a rejection as well because it's just move from here. If I consider this line as well, then this is a rejection. So let's say one, two, three, four, five, six, seven, almost eight, eight times price rejected. How many times did it just cross the level? It crossed once and twice. Now, if you want to trade this, if you want to enter a position on this, what would your position be? A buy or a sell? Tell me this, answer this. At at this current moment, if I'm looking to enter to this trade, should it be a buy or should it be a sell? Please answer everyone, everyone. I want everyone to answer this because we are in this together. We are all going to learn. You guys need to answer this so that it clears your doubt. In this position, what am I going to do? Chesta, I want you to answer. And who else is there? SK Rajput, I want you to answer. I'm waiting. Okay, Manoj, answer. Buy or sell? No, I'm just saying there's no trick in this. There's no third answer right here. Is this going to be a buy? Is this going to be a sell? What is it going to be? If I'm looking for a position, I'm trying to consider, I want to analyze this, which trade is better for me, which one looks good. All right, majority of the people have answered SK Rajput, you're pending, but let's do this. The sell is the wrong answer. I told you price has reversed from this position a lot of times. That means this is a good resistance and a support point. Resistance and support are the same things. It depends where the price is right now. If the price is above, that means it's support. If it's below, that means it's resistance, right? Now, price has clearly rejected this a lot of times on different levels. Now, it doesn't matter that price is coming from up to downside. We would look for a buy right here. And the reason is pretty clear. You can see that daily trend is also bullish. This is a very good zone where price doesn't bypass easy, right? I'm not saying that we are going to take a trade today on this, but 8 times price has rejected this. This could be the ninth time price would reject from this. Now, of course, more confluences are required. Right now, we are not taking any decision. But if I am looking for a buy or sell, if I have to analyze, I would be more into a buy because only 2 times price smoothly moved away from this area, from this zone. Only 2 times. So why would I be with the least probability? The majority of the time, price reverses. So I'm expecting price to reverse from right here. But now what would I do? I would go down to the levels where I can see what the EMAs are saying, what the structures are saying. 1 hour price is very far, right? So to break structure, it's not easy. Instead, I would look for is price to come up right here, then go down right here, then change the structure. If something like this happens, I can enter because now the price is bullish. You can see the price came down. It has to create a new lower high. It has to create a new lower low. Now this creates my stop loss tighter and closer to the support zone. I don't have to take my entry where structure is breaking at this point and now my stop loss is going to be here, right here, and my entry would be right here. That's a very big stop loss, right? So you shouldn't be entering that position. Rather wait for structure. If that structure doesn't happen, don't enter. It's as simple as that. So all of this you will learn more. This was not part of today's session, but I'm just going it over. I hope this helps. I hope you guys learned how to mark your trends, how to understand what is a higher high, what is a higher low, and further on, we'll decide how to do this with multiple time frames, how to add your confluences with these trends, how to understand what you want to do, what kind of trades you want to look for in a trend in the next class. I hope you enjoyed the class, and if you have any questions, feel free to ask even now. And also practice this, and if you have any doubts, drop me a message on Telegram. I'll respond. The next session is going to be day after tomorrow, not tomorrow, day after tomorrow. All right, great. So this sounds great. I guess there's no more questions. Thank you for joining again. Make sure day after tomorrow again you join on time. The class will begin on time. At max, I'm gonna wait for a minute. That's it. Thank you for joining again. See you guys. Bye.